Global markets focused on earnings, oil rally has stalled. U.S. stocks rose on Friday amid solid bank earnings, while treasuries fell as Chinese data bolstered optimism in the global economy. China's exports for the month of March rose 14.2% from a year ago, topping expectations of a 7.3%. But imports were down 7.6% from a year ago, falling short of expectations of a 1.3% decline. That gave China a March trade surplus of $32.64 billion, which is much higher than expected. As a reminder, the IMF said in its latest World Economic Outlook report that China is projected to grow by 6.3% this year, higher than the fund's previous forecast of 6.2%. Mixed positive data from China fueled risk-on sentiment across the global markets and supported stocks. The S&P 500 gained for a third straight week as it punched through the key $2,900 level for the first time in 6 months. JP Morgan Chase & Co. surged on a strong first quarter report, while Walt Disney Co. jumped to a record after it announced a new streaming service. On Monday, Asian markets mostly struggled as hopes over a trade deal mixed with worries about global growth. The Shanghai Composite Index closed down 0.3%, while Japan's Nikkei 225 index jumped 1.4%. On Saturday, U.S. Treasury Secretary Steven Mnuchin told reporters that the U.S. and China were moving closer to an agreement on trade. His comments fueled hopes that a trade dispute between the two world's biggest economies could soon be put to rest, but investors were cautious despite the reports that the two sides were getting close to the final round of concluding issues. European stocks were marginally higher on Monday in subdued deals, with many investors away for the Easter holiday break. Sentiment was partly supported by positive comments from U.S. Treasury Secretary Steven Mnuchin. At the same time, investors set aside last week's concerns about a possible new trade war between the U.S. and the European Union after President Donald Trump threatened to hit the bloc with tariffs over subsidies to aviation giant Airbus. U.S. markets were mixed on Monday as stocks halted a three-day advance after disappointing results from Goldman Sachs Group and Citigroup dragged down bank shares. The S&P 500 index slipped from a 6-month high as U.S. corporate earnings season kicks into a high year. Goldman slumped 3.8% for the biggest drop in the Dow Jones Industrial Average after missing estimates for sales and trading revenue. Citigroup also retreated after its revenue matched expectations. And as for currencies, the euro-US dollar was trading higher initially but turned flat towards the end of the day as the dollar index recovered modestly in the North American session. In its monthly report, Germany's Bundesbank said that the economy grew modestly in the first quarter and reiterated that the underlying growth trend remained subdued in that period. Meanwhile, the ECB Governing Council member Villeroy said that the monetary policy must remain accommodative, which put the euro under some pressure. And at the same time, data from the U.S. revealed that the New York Fed's Empire State Manufacturing Index rose to 10.1 in April from 3.7 in March, which helped the U.S. dollar index recover its daily losses as well. Meanwhile, Chicago Fed President Evans said that the U.S. economy was looking stronger than it did in December, and as a result, the euro-US dollar that failed to challenge the Friday highs above 1.13320 finished around the 1.13 psychological level and looks neutral after a rally on Friday. In commodities, crude oil prices declined marginally on the day, with Brent trimmed intraday losses after a break below the $71 barrier. The main reason behind the bearish correction were renewed concerns after Russia's finance minister said that Russia and OPEC may decide to boost production to fight for market share with the U.S. OPEC and its allies meet in June to decide whether to continue withholding supply. Meanwhile, the head of Libya's National Oil Corps warned renewed fighting could wipe out crude production in the country, which capped the downside pressure in the market. Production has also been falling steeply in Venezuela due to U.S. sanctions. Iranian output is expected to suffer when the United States tightened sanctions in Tehran in May. In the U.S., crude output surged to a weekly record of 12.2 million BPD amid the ongoing shale revolution. The U.S. drilling rig count, an indicator of future production, last week rose for a second week in a row. Gold prices plummeted to two-week lows on Monday as risk-on mood amid the U.S.-China trade optimism kept the downside pressure on the metal for the third straight session. The bullion extended losses to the $1,282 area but climbed back to the 100 DMA later in the day. The main drivers behind the pullback were upbeat China trade figures, which eased fears of a sharp economic slowdown and the growing optimism over a possible U.S.-China trade deal that boosted investors' appetite for riskier assets. From a technical perspective, the gold could resume the upside move if the recovery above the 100 DMA is sustained on the short term. The key level on the upside, however, remains in the $1,300 area, as a firm break above will open the way to $1,310 and to higher levels. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.